What's up, everybody? Welcome to the Stocks channel. My name is Corey, and today in the stock market we did see a very strong bounce after that quad witching sell-off last week. Is the stock market ready to go to brand new all-time highs, or is this all just a giant dead cat bounce? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so first up, just a reminder that I did launch my trade alert service, which is called Bank Trade Alerts, and it does only trade the TQQQ's ETF. Right now I'm running a 50% off promo for the first 500 members, and I will link the video above on exactly how the Bank Trade Alert service works. Our first members already got a buy alert on Friday, and I did resend that alert out this morning, and we already did sell that trade, so we already are having a profitable trade on the first day. So congratulations to all of you early adopters of the Bank Trade Alert service, and look forward to many more successful trades. Alright, so jumping into SPY, we did go up 1.43% today, and we did break and close back over that critical $420 support level. Remember, that's a very critical level that we want to pay very close attention to. Now, do note the price action did get rejected below the 20 simple moving average, which is right around $421. So while we're above 420, we want to be bullish, but we really want to see that price action breaking above that 20 simple moving average. Remember that in bull markets, you have two critical support levels, your 20 simple moving average and your 50 EMA. As you can tell from Friday, we closed right on top of the 50 EMA, and just like I said in my macro level analysis, we were still in a bull market on the weekly and monthly charts. So remember that weekly charts are more important than daily charts, but we still want to be aware of what's going on day to day. So we were at a critical support level and we were still in a bull market, and we did see buyers of the dip stepping in today. We had relatively decent volume, but we are closing just at a resistance level at 421. So we would really like to see the price action back test 420 as support, and then get a confirmation bounce and a breakthrough 421, and that could send SPY to brand new all-time highs. We'll still have to get through these targets above at 423 and 425, but above that we could be going to 427 and 430. Remember, don't look ahead. Right now the most critical resistance is 421, and we need to get above that level. Watch the critical support at 420 and 417, and if we do break back below 420 and we do break back below 417, that is actually going to be a bearish indication, and it could mean that this was all just a dead cat bounce. Remember, in a dead cat bounce, it looks like a bullish breakout, but it's really not, and it's just a relief rally in a bear market. So until we do get a brand new all-time high, we need to be defensive, and we really would like to see SPY getting back above 421 and staying above 420. Remember, the 50 EMA is still going to be very strong support, which is down here around 415, but below 417, it will be very likely we fail to hold that support and we come down to close the gap at 411. Remember, we still have a gap down there at 400, but we're not likely going to fill that gap until the next bear market, and right now we're still in a bull market. So follow the price action and follow the trend, and watch that critical resistance and support level on SPY. On the NASDAQ 100 triple Qs, we went up 0.5% today, and we did see the triple Qs finding support intraday off the 13 EMA. More importantly, we closed back over a positive sloping 5 EMA and above that support level at 342. The triple Qs still have a full bull trend with all of the moving averages stacked to the bull side, and they're all still positively sloping. So the triple Qs look primed to try to break out and try to form a brand new all-time high. So watch that critical resistance level above at 346. Above 346, we could be running into the 350s, but remember that these levels could trigger a correction and we could still get a pullback if we can't break above these levels. So anywhere between about 346 and 348 will be very strong resistance for the triple Qs. Our critical downside support is right around 342 and 339, and that 20 simple moving average is aggressively coming back into that 339 support level. So right now, 339 is the most critical support to watch on the triple Qs, and if we break below that, we'll be looking for 334, which is very close to the 50 EMA, right around 333.5. So the triple Qs has a ton of support below, and we're still in a bull market, so we would expect to see buyers of the dip. So overall, the NASDAQ 100 looks primed to try to form brand new all-time highs, and it would be a buy the dip scenario as long as we can maintain the bullish trend if we do come down and retest any of these critical supports and they do hold up. In the Dow Jones, we also did get that dead cat bounce today, and we did close the gap above. Not only did we close the gap above, but we broke through that resistance level at 33.6, and we're very close to retesting the 50 EMA right around 340. As you can tell from the Dow Jones, this is definitely a dead cat bounce look. We had a huge sell-off, and now we just see a bounce, and there's no guarantee that this bounce will continue into something that could gain traction and go into a bull market. So we need to see price action getting back above 350, breaking through resistance at 341.7, and getting back over the 20 simple moving average, which is right around 343. Your critical downside support is 336.7, And if we fail to hold that level, we are very likely going to fill the gap down here at 331.6. So watch that critical support level and look for the critical resistance at the 50 EMA right around 340. On the Russell 2000, we went up 2.14% today, and the Russell 2000 did close back over the 50 EMA. We did have a strong support level just above 220, and we did see the Russell 2000 bouncing today. However, it's the same exact story. Is this just a dead cat bounce? Well, in order to know for sure, watch the critical support, which is the 50 EMA, which is right around 224.6. If the price action can stay above the 50 EMA, the Russell 2000 will start to look bullish yet again. We still need to break above critical resistance at 227 and get back above that 20 simple moving average. So above 227, look for resistance at 230, and above 230, we're retesting previous all-time highs around 233. On the ARKK ETF, we went up about 0.5% today, and we did find resistance right around that $120 level. Above 120, we'll still have resistance right around 122, and above 122, we could be going back up to about 128. Your critical downside support for ARKK is going to be at 115 and that 20 simple moving average at 113.5. Below 113, we could be coming back down to 109 or 106, but right now you can tell from the moving averages that ARKK is starting to build up some bullish momentum. As soon as this 20 simple moving average gets back above the 50 EMA, ARKK will be in a full bull trend. So watch that critical support right around 115 to about 112.7, and price action above these levels could trigger a bull trend that could send ARKK much higher. On the VIX, which is our fear indicator, we see the VIX getting crushed, going down over 13% today and closing below that critical level at 18.2. Remember, I said if the VIX is above 20, we want to be a lot more cautious. And today we see the VIX going all the way back down through 19 and back down through 18.2. So this could be a signal that this VIX spike was just a normal volatile pullback because of quad witching, and we don't see follow through with the VIX closing back above 20. So overall, this is a bullish development, and it does mean that fear could be likely leaving the market and we could be getting ready to run back up to all-time highs. So watch to see if the VIX can stay below 18.2 and possibly try to get back down below about 16.6. If the VIX does bounce from here and go back above 20, that does mean this was very likely just a dead cat bounce, and we still got to go much lower before we finish out this correction. But right now the VIX is saying the market is bullish and it wants to go higher. On the dollar, we do see this parabolic move starting to cool off, and this could be bullish for gold and silver. We need to watch the dollar closely to see if it's going to find support and continue to head higher, or if the dollar was just squeezing to the upside and it's coming back down. So we will need to watch the dollar closely if we do want to trade gold and silver. On gold, we see a little bit of a pop up today on the weakening dollar, and we did find and bounce support at 1761. We broke back above 1776, which does mean we could be coming back up to 1829. Still watch that critical support level if we do see a spike in the dollar at 1761, because below there we could be going back into the 1600s. On silver, we're also finding support right at that $25.78 level, and we are starting to see our next price target could be 26.5. If the support level does break down, look for 25.1 to be the next possible support level. Remember, we're below the 50 EMA, so we need to be cautious at these levels. On Bitcoin, we're currently down about 11%, and Bitcoin is starting to break down. Remember, I said Bitcoin needed to get back above 43,000 for us to be getting bullish on Bitcoin, and it was never able to do that. It failed to hold support at 39,000, and it failed again to hold support at 37,000, and now it's breaking back down through that critical support I gave you just yesterday at 33,000. So right now you're looking for critical support at 30,000 and 27,000, and below 27,000 you're looking for support at 23,000 or 20,000. Remember, don't try to be a hero and don't jump the gun on Bitcoin because it's in a bear market and you don't want to get bullish on something that's in a bear market. If you're accumulating it for the long term, that's completely up to you. But if you're trading Bitcoin and waiting for the next bull market, we're not there yet and we need to see the confirmation in the price action. So watch those critical support levels, and your critical resistance is now going to be 33,000 and 37,000, and then again 39,000 in the 50 EMA at 41,000. So watch those critical levels very closely because it is possible Bitcoin could be going much lower. On Amazon, we dropped 0.94% today and we're still holding above a positive sloping 5 EMA, but it is time for Amazon to cool off. Remember, it went way too far, way too fast, and it's completely normal to cool off after a monster move like that. Amazon still looks like it could go higher with price targets up here at 35.52, but we need to get back above 3,500 to validate that price target. Downside support is 3,400, and if we break down below that, we could be coming back down to 33.11. Remember, Amazon's in a full bull trend, which does mean it is a buy the dip scenario, and you want to look to buy it off strong support levels. On Tesla, we went down 0.4% today, and Tesla is still failing to break out. Remember, the critical resistance is 626 and the 50 EMA, which is right around 633, and we need to get a couple price action closes back over the 50 EMA before we can get bullish on Tesla. Remember that it's in a bear market, and it's not going to get bullish below the 50 EMA. So watch that critical resistance breakout with critical downside support at 610 and 594. Below 594, we're coming all the way down to 546 or lower, so watch that critical breakthrough 594 very closely. On Apple stock, we had a bullish day today, going up 1.4%, and Apple did break out of that 131.8 resistance level. The next resistance level is right at 132.7, and above that we could be going to 135. Apple's very close to getting a full bull trend. It just needs that 20 simple moving average across back above 128. Apple is bullish above 129 with critical support at 129, 128, and the 126. It's very unlikely we're going below 129 if Apple is staying in a bull market. So watch that critical support and look for the next resistance breakout. On the financial sector, we went up 1.93% today, and we got very close to closing the gap above. It still looks like a dead cat bounce, and we're still below the 50 EMA. There's no more bullish trending, so it could be possible the financial sector is rolling over and trying to die, so we need to watch the critical price action closely. On the industrial sector, we went up 1.88% today, but again, it still looks like we could be going into a bear market if the industrial sector can't get back over the 50 EMA. So this is still possible, it's just a dead cat bounce, and we need to see the price action getting back over these critical levels. The healthcare sector went up 0.81% today, and it's back over the 5 EMA, and it still has a bull trend. So right now, the healthcare sector still looks bullish, and it does look like it wants to go higher. The energy sector bounced very hard today, going up over 3.2%, and it did find resistance just below that 20 EMA. Overall, it did find critical support at the 50 EMA, which is a good sign, but we did lose the bull trend. Look for energy to try to get back over that 20 simple moving average and try to reform a bullish trend. So jumping back over to the S&P 500, you can definitely see there's a lot of dead cat bounces across the market, but we are seeing strength in a lot of the sectors like healthcare and tech. It's still possible the financial sector and the industrial sector do recover from quad witching, but we still need to leave it open that they could be dead cat bounces, and the Dow Jones and the stocks in the Dow Jones could still be going lower. So we need to stay objective, and we need to watch critical support, and we still need to remember that the S&P 500 is still below that 20 simple moving average. So in the short term, bouncing off the 50 EMA is a great sign, but we need to remember that anything is possible, and we need to watch these critical levels closely. Also remember, I did launch my trade alert service, which is Bank Trade Alerts. So if you're just struggling through this market and you're looking for a hand-holding service that tells you exactly when to buy and sell, come check out Bank Trade Alerts. It could be exactly what you're looking for, and it does have very high win percentages. Also remember, I have the Stocks Channel Discord where I do intraday updates and analysis to always help you navigate this market. All of the links for Bank Trade Alerts and the Discord server are in the description below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.